Guys, I wanted to get to another very big story that we're, of course, following this morning, and I know you agree with me, Jim, which is ExxonMobil and its fight against that activist investors led by Engine One, including, of course, Calsters, and the fact that at this moment it appears at least two, and frankly, from what I'm hearing, likely three new directors will have been elected by ExxonMobil's shareholders to its board of directors. A stinging defeat for the company, of course. Many want to call it a watershed moment for the ESG movement. I won't dispute that, but you do have to point out that there are things that are singular to Exxon that you also have to include when you say something like that. Namely, Jim, and you know this is a company that for years really had no interest in what its shareholders were saying. None. They're making their decisions based on their 10, 20, 30-year plans, investing their money in the likes of Rex Tillerson or Lee Raymond. You can tell us whatever you want, but we're not necessarily listening. So you are talking about a company which, frankly, many investors I've spoken to would have termed arrogant. Now, that has not been the case under relatively new CEO Darren Woods, but that may also have been a part of this. A number of missteps on ExxonMobil's part, too, in terms of just how they approached all of this. The activist at D.E. Shaw, of course, they chose to settle with. They put two new directors on the board. They thought this was done. They never expected an Engine One would be able to mount this kind of a campaign. Let's not forget, they own no stock. Let's call it that, 0.02%. I mean, nothing. They spent $30 million, and they were able to get what very likely may end up being three directors. And that makes this watershed moment. That does make people question whether, in fact, the index funds, which prove so important in so many of these battles, given how much time they have spent courting new investors with an ESG mantra to a certain extent, are now going to be, much more of a significant vote when it comes to ESG being on the agenda in certain proxy fights. But again, I do, Jim, want to come back to reminding people that Exxon is its own entity, and it's not clear that were it another company, you could argue that it would have been the same outcome, even if it had been an ESG versus more of an ESG agenda versus they say they're ESG as well, but a less ESG agenda.
Had the stock done better, would the public have voted with Darren? And then maybe more important, when I look at the people, these are people that they, by the way, who they presented by Engine One. These are really, I'd say, outstanding people.
No, Gregory Goff, a long history in the energy industry.
Well, why would he want to?
I think these are two directors that I think the board is going to be happy to onboard and welcome to a certain extent. But it does bring up a lot of questions. Again, they're going to have had potentially as many as 5 new directors added over this period of time. Remember, early in the week, we pointed out that they, in a shareholder letter, said they would appoint 2 new directors over the next 12 months, one with energy experience, one with experience in climate transition, for example. Based on my reporting, I think that was part of what they believed was an agreement with a number of the significant index funds, Jim. I think Vanguard and either BlackRock or State Street for them to vote in favor of Exxon. And then they changed their mind. They did not get the support they thought was there from the index funds. They still almost won. So they still had a great amount of support from retail. But the index funds here, acting as they did and voting as they did, is an important moment. Does it mean that ESG will be used as more of a club by any other activist, or that perhaps companies will be forced to settle or think it's better to settle as opposed to going to a full proxy fight? Perhaps. But again, you know Exxon well for many years.
I do.
And I don't want to, you do want to make sure people understand it does have something to do with the history of the company.
They were very late with the charm offensive. They didn't seem to understand that the media must be addressed in a more formal way. David, who will be on the nominating committee? Because I have to question the staying power of Darren Woods.
Well, listen, that's right to do that. I asked him yesterday whether, in fact, because Mr. Woods did join me for a brief interview yesterday at around 3 o'clock, I asked him whether it was a rebuke of his leadership. Here's sort of what he had to say overall about his shareholder base.
With over 3 million, almost 3 million shareholders, it's not surprising we've got a pretty wide range of views that were expressed. Many supported the plans that we've put out, the work that we're doing to improve the earnings and cash flow capacity of our business, as well as the work we're doing to help advance the company to a lower carbon future. And today we heard some of the institutional shareholders communicating a desire for ExxonMobil to further these efforts.
One of the questions, of course, will be how much further do they go? And by the way, again, Carl mentioned Shell, and that court case there. So, and even Chevron, there's a lot of questions here, but it's certainly an important moment for the ESG movement.
Mike Wirth from Chevron distinguished himself very early from Darren Woods in terms of willing to sit down and ask, not a listening tour so much as like, help, I want to do the right thing. I've got a corporate governance conference coming up. It's too early to really talk about, but I reached out to Mike because Mike is a person who basically is just saying, I know we're on the wrong side of history. Help us get to be on the right side of history. And Exxon, just like John D. Rockefeller, felt there was no history other than their own.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.